All right, welcome back, bro chanchos. Today is August 13th. It's going to be day 30 of the beginner's blueprint. I think this should drop like the 14th or 15th. I think it's 14th. But today we are going to be learning about continuations with inversions, right? Pretty fucking simple. This video is going to be fairly short because all we're essentially doing is just looking for conditions to open up, right? What are conditions? 5/15 minute for value gaps. Looking for those to open up, tap into those, and an inversion out of it, right? So starting with this example here on the left, what do we have? Well, we have an uptrend, okay? And then what do we end up getting? Well, we tap into this 1 hour for value gap, and what do? We reject it, but we don't really invert anything out of it. Let's say there's a 5-minute bullish right here. Okay, we're respecting the bullish up until this point, but we're not really like rejecting the bullish, right? Price starts kind of chop around a little bit. So with that being said, if price chops around, what do? We get a resweep of these highs, most likely creating an SMT, right? Because that's what typically happens. And then what? Well, let's say we get an inversion and have clear targets below. Cool, we can go ahead and enter. But continuations, let's say we missed the entry, right? For whatever the reason is, we weren't convicted enough. We just straight up missed it, right? We didn't see it. Well, and you see price continuing down, okay? We took out TP1, which would be these relatively equal lows right here. But what can we do? Well, instead of entering all the way down here and having FOMO, what is the smartest thing to do? Wait for a condition to open up, okay? So let's say we have a 5-minute that opens up in this scenario, and price trades back into that 5-minute. Well, we're not just going to enter strictly off the 5-minute tap, right? Because price, well, can easily just go like this, run through it, and then maybe even continue higher, right? Because we never know what price is going to do. So let's say we have a condition open up. So we're like, cool, we have a condition open up. If price trades into it, I want to see an inversion coming out of it, and we still have targets below us to what? To set as our take profit areas, right? Our key levels. So what do we get? We missed our original entry. That's perfectly fine. Even though we swept out these lows, we can clearly see the trend is shifting. Why? Because we just tapped into a high time frame gap. We have an SMT, we got an inversion, and what else did we get? Well, we also got, let's say, a break of structure right here. Okay, a market structure shift, whatever the case is, right? CISD, we have conviction that price is going to continue lower. So again, condition opens up, we trade into it. What are we looking for? I want to see a trade into this condition and then an inversion out of it. But let's say we start accumulating orders in this condition, right? We don't really invert anything. Then I would want to wait for a resweep of these highs. And then let's say we get an inversion right here. Yeah. Boom. We can go ahead, enter off that. Let's go short. Stops at the accumulation zone highs that got taken out. And then we could target all this sell side right here that is still available, right? We have sell side liquidity, we have London lows, we have an unfilled for value gap. That's what we can target. However, if price does this, which is typically what we want to see, trades up into the 5-minute and then instantly rejects it, and we get a inversion right here, well then boom, we can go ahead and just enter off that. No need to wait for a resweep, right? We only wait for a resweep if price starts to chop around and not reject it instantly. But if price trades into it for value gap and then rejects it almost instantly, then boom, we can assume price is going to change, or in this case, continue the direction due to the fact that we just disrespected a bullish PD array and we just respected a bearish PD array, right? So then we can go ahead and target the sell side, these London lows, and this unfilled 4-hour for value gap. Pretty simple. That's why this video is going to be fairly short, right? Let's say this is an example, right? Price is clearly in a downtrend. What do we have? Well, we have an unfilled 5-minute that did not get tapped into. But then what happens on the way down? There's a 15-minute that opens up and we tap into the 15-minute. Do we need to wait for this 5-minute to get tapped into to enter? No, right? Because if we tap into this 15-minute and then reject it with, let's say, no resistance, right? Let's say there's a 2-minute fair value gap right here and we reject it, inversing this bullish 2-minute gap, well then we can still target our key levels 1, 2, 3, 4, however many key levels are below us, right? Now again, if price isn't really doing anything with this bullish gap, right, and we start to chop around, well, either we're going to want to wait for a resweep or a different fair value gap to open up, maybe in one of these legs up, preferably this leg right here, right? So, to look something like that. But for this case, let's just say we tap into this 15-minute and we reject it instantly. Then boom, we're entering off the rejection. And if we have clear targets below us still, which we do in this case, right? We have key level 1, we have key level 2, we have key level 3. Well, then we'll be perfectly fine. We have clear draws on liquidity, and we can go ahead and target those clear draws. Now, if we enter, if price taps into this 15-minute and we invert this 2-minute gap and we enter and we end up getting stopped out, well then, whatever, so be it, right? It was A plus setup. We waited for a condition to open up, tap into the condition, and up until the point we were entered, we were respecting the condition, right? Why? Because we were respecting bearish P to raise, disrespecting bullish P to raise, and we were going short. So that's exactly what we wanted to do, right? So again, if you guys don't know what conditions are, I will leave the link in the description to the conditions video. I suggest you guys check that out, because in continuation models, you're going to have to wait for a condition to open up, right? Because we don't want to enter with the premium entry, right? We want to wait for price to retrace, fill the void in the market, okay? And then reject out of that void or respect the fair value gap, right? So we always want to stay patient. There's always going to be opportunities in the market. Like I said, there's about 2 to 3 A- setups from 9:30 to 11:15 that happen on a daily, and there's about, let's say, 1 to 2 A+ setups that happen. Today's the 13th. There was 1 A+ setup that happened today and a couple like B setups, right? So there is always opportunities, but as long as we have conviction, and those areas of conviction, like let's say the sell side in this example, for the first 2 examples, right? Let's say there's 2 sell side key levels, or the 3 of them, key level 1, 2, and 3 are still there, right? But we missed our original entry, then that's fine. Let's wait for a condition to open up and let's reject the condition. Now, these key levels already took, and we do something like this, well then most likely there's no reason for price to come back down in this general area, right? So we still want to have our key levels or our draws on liquidity, let's say, valid, right? We don't want to just enter off of a rejection of a fair value gap with no clear draws on liquidity below us, because then that can end up hurting us, right? We can end up getting stopped out, and then you most likely have rushed it. So moving on to this last example, this is going to be our only bullish example, but same thing, right? Come down, we miss our entry right here. That's perfectly fine. We retrace a little bit. We come up and take key level 1. Okay, so exactly what I was talking about. We take key level 1, and we aren't really anticipating a reversal, but from key, what happens at key levels, right? Price tends to reject them. So we could reject it just a little bit, but if we reject it and there's a 15-minute unfilled fair value gap right below it, and we still have high conviction that key level 2 will get hit, well, what can we do? We can wait for price to come down into this unfilled 15-minute and then reject it. And how are we going to enter? What's our entry model? Inversions. Well, it's mine. I don't know what your guys' is. If you guys are watching me and I'm your mentor, this should be it, right? Boom. Just like that. A 171. This looks hella ugly. Hold on. Make it something like this, right? We just want to wait for a condition to open up and then reject it. That's all a continuation model is, okay? We need to see a rebalance of a price range essentially before entering, like I said, because if we leave all these fair value gaps right here, this is just a quick example. Let's say this is unfilled. This one's unfilled. We create one right here, right? Yeah, we're clearly in a downtrend and price is most likely going to want to continue down, but we don't want to gamble that, right? Because again, what do we know about unfilled fair value gaps? Well, they're a draw on liquidity. So we're most likely going to want to have to tap into one of these before continuing lower, whether it's the first one, second one, or third one. That's just how price moves, like in general as a whole, all right? So with that being said, let's move on over to the charts and we can show you guys live examples of this. Okay, so both of these examples happened yesterday. One I actually took and the other one I did not, but I could have took it. I just didn't. I just missed the setup, right? It is what it is. It happened. So right here, we had data news at 8:30. So what do we have? Well, we have data lows right here, okay? Data lows. Market opens. What do we see? Well, we went over this general example in the PDI video, right? So what do we have? We have a 15-minute fair value gap that opens up, and we respect it, right? Bearish fair value gap, but we're also inside this 15-minute bullish. So this is why I didn't worry about anything right here. But what else do we have open up, right? We have a 5-minute bullish open up as well. So what ends up happening? Well, we end up running through the bullish 5-minute gap and then respecting this 15-minute bearish gap. So I personally would have missed this inversion right here due to the fact that I would be too worried about this fair value gap over here as well, which is normal, right? We don't want to be, we haven't disrespected this PD array, right? Because nothing has got inversed, right? Yeah, we came down into it, but nothing inverted this 5 or 15-minute gap. So technically we are still respecting it. So what do I want to see from here? I want to build more structure, right? Invert this 5-minute. Well, what do we end up getting? Our target is still here, right? And we still have all this LRL right here. So we still have valid targets. What opens up? A condition. What kind of condition is this? It's a 5-minute fair value gap. Okay, so what do I want to see happen now? I want to see price trade into this fair value gap and then reject it. Why? Well, because now we have data lows, but what is this down here as well? It's also relatively equal lows. So we have clear draws on liquidity, okay? Now on the move up, do we have any 1-minute fair value gap to invert? Nope. Do we have a 2-minute? Nope. Is there a 3-minute? Nope. Okay, but what ends up happening? There was a 30-second, which I'm going to show you guys in a second, but I can't show you the 30-second, but I'll show you exactly where it happened at. Okay, boom. We're inside the 5-minute fair value gap. Now we tapped it, okay? All we're waiting for is our highest low time frame inversion. Again, if we have conviction that price is going to go lower and there's no 1 through 5 minute, well, then we can go off of a 30-second inversion. And I don't have the 30-second chart, but the 30-second inversion happened like right here, okay? And I actually seen a lot of people take this trade. So their entry point would have been something right here, stopped at the swing highs inside of the 5-minute gap. What do we have? Well, we have our main target, which is data lows, but we also have relatively equal lows as well. So how long would we have been in this trade for? Well, there goes another minute. So about a minute and like 45 seconds, we would have been in this trade, right? And see how we missed our original entry with this 5-minute inversion due to whatever the fact was, right? Either we were too worried about this, we just missed it completely, so on and so forth. But what ends up happening? Well, we enter, or we open up a 5-minute gap, our condition, okay? And what do we end up doing? We end up coming into our condition, inversing the highest time frame for value gap out of it, which in this case was a 30-second. Look, I don't have the 30-second, so it just shows me this. I used the 30-second on Top Step. But there was a 30-second right here. Enter off the 30-second, and boom, your target is still there. And actually, this was awesome because you had relatively equal lows with this as well. So I missed this due to the fact that I was either not paying attention or I just missed it, though. I would have took this if I seen it. Why? Because, well, we had data lows and then all this LRL. So we had clear targets. Now, overall, back to like kind of what I was stating in the PDI, like if we are going against the trend, we only want to take like one take profit, right? So what is this overall trend right here? We're clearly in a bullish structure. So it was okay to take this short, but since we're in a bullish structure overall in the higher time frames, this is going to be our one and only take profit. All right, we're not going to hold it down to this LRL because price can do, well, exactly what it did and take out that shit and then just reverse all the way up. And then boom, that brings us to our next example. What do we have? We have a reversal. Let's say we missed this 1-minute entry right here because we didn't have enough conviction, right? Let's say we missed that entry for whatever reason. What ends up happening? Well, we continue higher. We have a here, let me get rid of this. We have a 5-minute fair value gap open up right here. But now let's be like, to use our critical thinking real quick. Here, let me delete all this other example. Oh, fuck. Whatever. We don't need that anyway. Okay, we took out data lows, and we are overall bullish on the day. Let's use our critical thinking. And price is all the way up here. Is it going to retrace all the way back down about 80 points just for a 5-minute fair value gap? Probably not. It can, but probably not. Chances are we're either going to open up another one or we'll open up a 15-minute. So what happens here? Well, we get another fair value gap right here. That what ends up happening? We don't tap into. What's going on the 15-minute, right? Nothing yet. What do we get on the 15-minute? Boom, a 15-minute fair value gap opens up right here. Okay, and we'll mark this one in, let's do 2. Okay, so now with a 15-minute fair value gap opening up, and we want to see a continuation, right? Because we're clearly in an uptrend now on the lower time frames. We have an uptrend on the 4-hour or the higher time frames, right? And we have conditions below us. What are our conditions? Well, we have this 15-minute, which is this blue box, and we have this 5-minute, which is this pink box. And what else do we have? Oh my fucking God. Everything I'm teaching you guys is falling into place. What is this right here? This is an accumulation zone. So what are we looking for? With conditions below us. This is literally an A+ setup, and this is why I took this setup. I was very patient actually this day. Typically, I won't take any trades, but it's 1048. It's pushing it. But what do we have? We have an accumulation zone with conditions below us, and they're bullish conditions. So what do I want to see? Well, I want to see a manipulation lower and then a rejection out of it. Okay, so what do we end up getting? Here is our manipulation move, right? Because here's the bottom of all the accumulation zone. So boom, what do we manipulate into? Here's our manipulation move. Let's mark it in red. Okay, we get our manipulation move lower into what? Into this 15-minute fair value gap. Okay, and what do we end up doing on the way down? What do we look for in manipulation legs? We look for fair value gaps to get inverted, right? So what do we have here? Well, we have a bearish 1-minute fair value gap that opened up. Not only did the bearish gap open up, but we also have an AMD model. We have the manipulation into a continuation model as well, okay, which is our 15-minute fair value gap. So what am I doing? I'm just waiting for this to get inverted now. Boom, inversion happens. Your stops, or not stops, but since we are in a bullish trend overall, your break-even point can be this right here. I mean, I didn't go break even just because the RR was pretty shit. But you could have gone break even right there, right? If you weren't fully convicted, which I don't understand why you wouldn't be in this example because we're clearly in an uptrend. Continuation model, AMD model, right? 1-minute inversion, respecting bullish PD rates, disrespecting bearish PD rates. What ends up happening? I didn't go break even right here. I went break even when ES created a SMT with these highs right here, and I'll show you guys in a second. Because then we would have a bearish PD rate going against us, right? So ES almost took out these highs right here. Boom. Okay, so they took out these highs. So now I'm break even, right? Which is honestly not the best break even spot. What the fuck? Why is there a gap? Well, there was a candle here. I don't know what happened to it. I don't know what's wrong with the 1050. There was 2 candles there that I'm missing. But whatever, we continued higher. I ended up exiting my position on my exit phase due to the fact I just wanted to secure it. But what did I secure profits? But what did I do? Well, I just moved stops to break even on this trade because we had a bearish PDA rate going against us. But what ended up happening, all we did was tap into our optimal point of entry. And then we continued higher. So if you guys still, not still, but like if you guys just had your stop loss still there, no break even point, you would have won this trade. So overall, a solid trade, right? And then even if you did miss this entry, I don't know why there's a gap. That's bothering me. Just think of it as like 2 candles are there because there wasn't there. If you missed this entry or got stopped out, well, what else did we have? We had this 1-minute inversion as well that you could have entered off of. And my boy actually entered off that. And he took full profits right here, right? So there was this area of liquidity. There was this area of liquidity. And then there was all-time highs. Here, let's go to that early. And there was all-time highs right here. So we had still valid points of interest, right? Just say we're right here. So we got stopped out for whatever reason. If you secured profits, I wouldn't have re-entered. But if you did get stopped out and you're still highly convicted, right, and you're not worried about that bearish SMT, well, what do we do again? We're disrespecting bearish P to raise. We inverted it. Cool. We can then re-enter. Stops at the swing lows. And then still have those take profit points, right? 1, 2, and 3. And I believe all 3 ended up getting smacked. 1, 2, and 3. Yeah, so all 3 of them ended up getting literally just dominated, fucked on. 0 drawdown with this trade, along with barely any drawdown with this. The only drawdown we got was when price came and retraced, tapped us out of the order, and then continued higher. And you'll notice that, especially with inversions. Price will come down, tap the optimal point of entry when a break-even point should be in place, and then continue higher. But not every time does that happen, so that's good. Sometimes it will happen, though. Clear continuation model to all-time highs. Okay, let me show you guys one more example, and I believe it was from the week prior. It's just the trade I took. I'm not cherry picking. These are just trades I took, right? All right, so this is from last week, right? So market opened right here at 9:30. What do? We're kind of just going up and down, right? No clear form of direction. What do we have right here? Well, we have a clear accumulation zone. What do? We manipulate higher. Doing what? Sweeping past. Well, I think at this point it was all-time highs. So we took all-time highs, right? And well, at all-time highs, if you guys know anything about all-time highs, we don't want to fucking be entering off the first inversion out of it, right? If we're going to be shorting all-time highs, we want to wait for further confirmation. So yeah, we got an inversion right here and whatnot. Some people actually on social media took this, which is actually crazy. But what ends up happening? On the way down, okay, we inverse all like this shit right here. This last 1 minute is getting respected, but so be it, right? On the way down, what do we create? Create a 5-minute fair value gap. So if you missed your entry point somewhere up here, right, if the PDI wasn't giving you an A+ setup, then what can you do? You can wait for a condition to open up. And what do we have? Well, we have these lows right here. What else do we have below us as valid draws on liquidity? We have this unfilled 1 hour. We have this unfilled 1 hour. We have this unfilled 4-hour fair value gap, which is also 4-hour lows. So we have draws on liquidity below us that we can still target, right? These are valid draws on liquidity, okay? So let's say we missed the first entry, right? Price comes up into here, but it kind of looks like chop a little bit. Don't see an inversion of any sort, right? You don't want to be trading the chop. Okay, we missed this entry too. What ends up happening? Okay, price took TP1 out of the floor, right? So this is no longer needed, but what else do we end up getting? Well, we get another 5-minute that opens up. And let's see if there was a 15-minute. Nope, no 15-minute. But we get another 5-minute that opens up. So if you guys want to continue to short, right, we're not just going to enter off the tap of this 5-minute gap. Even though we have valid draws below us, what do we want to see? We want to see a tap and then a rejection. So what do we get? Didn't tap into it. We actually created equal highs. Okay. Still chopping around. Came up, swept the equal highs. And what do we have? Well, we have another resweep with a valid form of entry right here, right? Here's a 1-minute fair value gap that we're looking to get inverse. Go ahead and invert it. And what ends up happening? It takes our draw on liquidity. Oh my goodness, right? Now, I don't know if it ended up playing out towards those other draws. But like I said, we were bullish overall. So if we're bullish overall in the higher time frames, what are we doing on the lower time frames? If we're shorting, we're only taking one take profit. So if you guys don't like this RR, well, either you could have, no, I would say your stop's right there. You could just move your take profit to a 1-to-1, which would be right here, and that would have got hit anyway, right? But I wouldn't move your stop loss in this scenario due to the fact that there's no like order block right here or anything, right? And let's see what price ends up doing. I actually don't even know what price ends up doing, so we're going to figure it out together. Here, let's go to the 5-minute. I wonder if it does end up taking out. Like, this is just terrible price action. You don't want to be trading this anyway. But yeah, it ended up taking out all the draws on liquidity. So if you guys have fucking balls of steel and you didn't like this first one, which I would have just took profits at a 1-to-1, could have just moved your stops to break even after the first take profit got hit, and then you could have held it all the way down to this. Here, I'll show you guys right now, to this 4-hour low, which was also a entry point to a 4-hour for value gap. So that is how you use continuations with inversions. I'm not going to make another video on this due to the fact that it's really simple, right? All we wait is for a 5 or 15-minute condition to open up. We wait for it to tap that condition. Sometimes we can use an hourly, right? If there's no 5 or 15-minute, but like let's say 10 a.m. just opened and those previous candles created an hourly for value gap, you can treat that hourly as a condition, right? But most of the time we are going to use just 5 or 15-minute gaps. So if we're in a trend, miss our optimal point of entry, wait for a condition to open up, 5, 15 minutes, sometimes an hourly, wait for price to go into the condition. And then how do we know if it's a valid rejection out of it? Well, we would get an inversion for value gap. Enter off that, stops at the highs or lows, depending on which way we're going, and then make sure you have valid draws on liquidity below you. So that being said, that's all for today's video. Pretty simple video. Tomorrow we are going to get into our mechanical model, which we are targeting on field for value gaps. So that is going to be a fun video. That will be 2 parts, maybe even 3, but as of right now, 2 parts on that. If you guys have any questions, comments, concerns, put them in the comments. DM me on Instagram, TikTok, Discord, right? I have a free Discord. Link is in the bio for that. If you guys don't understand anything that I just said, whether it's conditions, whether it's inversion for value gaps, whether it's normal for value gaps, whether it's liquidity sweeps, highs, lows, trends, whatever the case may be, I will leave the video links in the description. So go check out those videos as well. All right. Appreciate y'all boys for watching. Y'all have a great rest of your day, and I will see you back tomorrow with day 31.